Joining us now to discuss the crypto markets is Martin Leinweber. He's digital asset product strategist at MarketVector Indexes, a regulated benchmark administrator. Welcome back, Martin.
Good morning. Glad to be here.
Glad to see you again. So, of course, we had the CPI data come out. It was up 6.4%, a little bit higher than expected. The markets sneezed a little bit and continued going about what they were doing. Are we done worrying about inflation here?
Yeah, that's the question. I mean, the market reaction, it seems it's a little bit undecided. Yeah, so it was a little bit dovish at the beginning. Now the dollar is pretty flat. Bitcoin is down. So it seems market focuses more on the trends and not at the level. But maybe the fact that they've changed the methodology to calculate the CPI going forward plays also a role. Now that's just an initial reaction, and we'll have to see how these moves will develop during the day. I think this raises the question about whether this is just a temporary bump on the road to the Fed's 2% target or a sticky inflation outlook. Keep in mind that the new approach of Fed Chairman Powell has created a buzz in the markets. He has shown a more relaxed and hands-off attitude towards his role and has made it clear that he is not going to persuade people to have a different forecast. And so Powell is basically leaving it up to the market to decide the direction of inflation. And this, I think, leads in general to this uncertainty. So it's a lot of noise at the moment.
So how does this translate, of course, into your theory here when it comes to crypto as a risk-on versus risk-off asset, is mostly a risk-on asset? Does that continue? Because you've also said that there's some amount of token picking that can happen here. Can you explain a little bit?
Well, I think the markets may have to adapt to a situation where the economy continues to grow. Inflation is above its target, but not in an alarming level. And nominal interest rates are slightly higher than what we have been used for the past 20 years, but still very low in absolute terms. And so the crypto market is shifting from a focus on beta trading to looking for alpha and digital assets. And there is a renewed interest in thematic investing. So tokens such as Optimism, the Layer 2s, or DYDX, Exchange, or Lido, the liquid staking derivatives, have seen significant growth due to the emerging themes and specific catalysts, mostly regarding a change in the token economics, with a noticeable increase also in trading volumes compared to 2022. And I think this change in trend away from general risk-on, risk-off price highlights the return of token picking in the market. And that's a good sign, I think.
All right, so you also argue that token picking and thematic investing are back in vogue, and trading is no longer entirely dictated by general risk-on, risk-off price. First of all, what do you mean by that, and which tokens are you looking at?
Well, as I said, I'm working for an index, so I can't speak of specific tokens I like, but I think when you look at themes, and you've shown it here, you see there is a certain dispersion. Of course, when the market is falling, all other themes will also fall. But you see there is, for example, a greater demand for infrastructure applications. Also, DeFi could decouple when you compare it with Bitcoin. And that's different to what we've seen in the last year, where everything was heavily down. And so, of course, that's just an observation based on the year-to-date performance so far, but at least an encouraging one. And at least you've seen with the macro backdrop so far we've seen today, I think that's a theme which could be going on for the rest of the year.
All right. I'm also looking at BUSD's dominance. That's increased from 69% since early Monday. In comparison, Tether's presence has declined to 3%, the lowest in the pool, according to data sourced from analytics tool Chain9 and Curve, indicating an increased preference for USDT over BUSD and other centralized stablecoins in the wake of the regulatory action we talked about in the earlier segment. I wonder what your outlook is on stablecoins.
Well, stablecoins are a pretty important part of the ecosystem. I would say it's the clear winner in the last bull cycle. Yeah, so most of the flow has gone to stablecoins. They are important building blocks also in the DeFi world. And also an important risk of assets. Yeah, if you don't want to be just invested in crypto, yeah, you go to stablecoins. And so it's important to have a reliable and robust risk of asset. And so, of course, these headlines we've had so far with the Binance USD and the SEC action is frightening investors. But that's something we had also last year. I mean, keep in mind, we had the debacle with the algorithmic stablecoin UST. We had some headlines in the past around Tether. My hope is that we will have more clarification going forward so that investors will have a reliable stablecoin, because we need that in that ecosystem.
All right, Martin, thanks so much for your analysis. That was MarketVector Index's digital asset product strategist, Martin Leinweber.